Alright, so we're going to be talking about depreciation expense in this problem. And so they give us three different types of machinery. There's typical machinery, there's a forklift, and there's a truck. And we're going to calculate the depreciation expense for when they get rid of these and when they sell them. So the first one we have right here is just going off the machinery that was retired on January 1st. And so since it was purchased in 2007, it's used up its 10 years of useful life. So we see that we're trying to calculate everything from, it's been updated as December 31st, 2016. And so that's used up its 10 years from January 1st, 2007 to December 31st, 2016. So it doesn't have any more use for the company, money-wise. And so we just take the total of $83,780 and we put that as a debit in accumulated depreciation equipment, and then the equipment goes down by $83,780 as a credit over here because the equipment is usually a debit account, but now it's being credited because it doesn't have any more use for the company. Next, it says to calculate the depreciation expense on the forklift, and this was a little confusing at first, but it says all depreciation was up to date as of December 31st, 2016. And so we don't have to do the total of up until then. We just have to do from December 31st, 2016 to when it was sold on June 30th for $14,160. So to determine the yearly and the monthly depreciation expense, it says it's on a straight line depreciation, so we simply take 35,400 and we divide that by 5, and that gives us a yearly of 7,080. But we see that from when they last updated it on December 31st, 2016 to when it was sold on June 30th, 2017, that's been 6 months, so we have to do half of that. So 7,080 divided by 2 to give us 6 months is $3,540. So that's what we put in right here. And that's been the depreciation expense from this December 31st, 2016 to when it was sold on June 30th, 2017. The next thing we're going to calculate is the sale of the forklift. So it tells us up here, so this first one we're going to look at is the equipment, and that's just how much the company bought it for. And so that's up here at $35,400. Another thing they already give us is how much it was sold for. It was sold on June 30th for $14,160. So we're going to put those in cash was received, so it's a debit, $1,460, $14,160, and then we credit the equipment because that's how much the value has gone down, because and that is $35,400. And for this one we have to calculate the total accumulation equipment from the time that they first bought it. So it was at $35,400, and we already determined that the yearly depreciation was $7,080. So we have $7,080 times 3 years that they've had it, because they bought it in 2014, and then we're going all the way up to June 30th, 2017. So that's 3.5 years. So to get 3 years, we take 7,080 times 3, and that gives us 21,240. But that's only 3 years. We still have 6 months that we haven't accounted for. But that 6 months is right here. We already calculated that. So we just need to add that to 21,240, and that gives us 24,780. And that's the total accumulated depreciation for the equipment for that forklift for its useful life that the company had it. And the next thing we're going to move on to is the depreciation expense on the truck. This one is a little difficult at first just because it's got a salvage value up here, and so you subtract the salvage value from the starting cost. and then you calculate everything. So you take the starting cost, which is $39,416, and you subtract $3,544 from that, and that gives you $35,872. So that's what we'll use to calculate its yearly depreciation. So we have $35,872. So we divide that. It has a useful life of 8 years. So we're going to divide 35,872 and divide that by 8. And that gives us $4,484 per year that it depreciates. And since it's been updated as of December 31st, 2016, and the truck was discarded on December 31st, 2017. And so that's 1 year. And so we just have to take the 1 year that we just calculated, which is 4,484. And that's right here. And the last thing we have to figure out is to record the sale of the truck. Now, actually, it wasn't actually sold. It was just discarded as of December 31st. So they don't receive any cash. And then we have to determine the total accumulation of the equipment, just like we did up here for the forklift. And so its total useful life was 8 years. So we calculated the yearly depreciation already for $4,484, and it was purchased in 2012. And then we're trying to figure out what the total depreciation was until December 31st, 2017. So that's 6 years that it had a useful life. And so we just take 4,484 and we multiply that by 6 years. And that's $26,904. And that's what we see right here. That's the total accumulation of the truck. And then another one that they already give us is the equipment, and that's how much we bought it for. And that's $39,416, as we can see up here. And so we just plug that in. And an easy way to figure out this number is because debits equals credits in every transaction, is we just take 39,416, subtract 26,904, and that gives us the loss on the disposal of this plant asset, and that's $12,512. There was a lot to this problem, a lot to figure out. Had me stumped a little bit, but luckily figured it out. If you guys have any questions, if I didn't explain it very well, just let me know in the discussion board, and I'll try and help you out. But once again, that's problem 9-3A, talking about depreciation expense. If you have any questions, let me know. Thanks.